You know, on this channel, I am all about helping the average Joe investor generate cash flow in their portfolio. And the reality is it's 2024 now, and it seems like every single week we see new ETFs popping up with alternative and unique ways to create cash flow. And today we're talking about two brand new ETFs from Roundhill XDTE, the S&P 500 0DTE covered call strategy ETF, and QDTE, the NASDAQ 100 0DTE covered call strategy ETF. In this video, I'm going to break down for you exactly how these ETFs work. We'll look at the underlying holdings, how they implement their strategy. We'll look at the prospectus, how they hold the underlying index, and how these investments are different than the Defiance ETFs, QQQY, IWMY, and JEPY. What's up, you guys? Welcome back to the Average Joe Investor channel. If you want to take the next step in implementing income strategies in your own portfolio, you want to learn from other like-minded investors and work with me on a more one-to-one basis, make sure to check out the Patreon community. In addition to our most popular strategy, where you get access to the Discord community, there are new tiers opened up where you can work with me on one-on-one on a more dedicated basis. To learn more, check out the link down in the description below. Okay, so let's talk deeper about these Roundhill investments, which are brand new to the investment community. So quick note here, what does 0DTE strategy mean? First off, we're talking about options, either covered calls or cash secured puts. 0DTE means 0 days to expiration, meaning that the options we are buying or selling in any strategy are expiring at the end of today. There's a lot of value in utilizing these types of options because the amount of decay that occurs in the value of the option is significant over the course of that one day. And then by the end of the day, it's either worth something or it's worth nothing. So here's what they say about QDTE on the website. The Roundhill NASDAQ 100 0DTE covered call strategy, QDTE, is the first ETF to utilize 0 days to expiration options on the NASDAQ 100. This is true because the Defiance ETFs, which we've mentioned a few times already in this video, they utilize a cash secured put strategy and hold cash, and this is a little bit different. So it is in fact the first ETF to operate this strategy. QDTE seeks to provide overnight exposure to the NASDAQ 100, we'll come back to that in a second, and generate income each morning by selling out of the money 0DTE calls on the index. What do they mean by overnight exposure to the NASDAQ 100? It means that they have to have some sort of long exposure. They have to own something that is either exactly the NASDAQ 100 or very similar to it, so that if this index goes up in value, then this investment also goes up in value. Now, there are a number of different ETFs that do something similar to this, namely QYLD, which runs a covered call strategy but on a monthly basis, and they hold the underlying stocks in the NASDAQ 100. This is a little bit different though. Let's take a look at the top holdings right here. You'll notice that in this section, there's only one holding, and that is the NDX, which is the NASDAQ 100 index, and this is the expiration date, 03/21/2025. And the strike price is $16.96. So that's interesting. They own a call option. So essentially what they operate here, and I'm going to pull up their prospectus here so we can talk about it. We're on page 4 of the prospectus for QDTE under the principal investment strategies. Here it says, the fund seeks to achieve its investment objectives through the use of a synthetic covered call strategy that provides current income on a weekly basis. But I want you to really focus in on synthetic covered call. In other words, a synthetic covered call is a way to synthetically match what happens in the NASDAQ 100, but doing so without actually holding the index. What this is known as a deep in the money call option with a long dated expiration, also known as a leap option. And it doesn't expire until a full year from today, and it's deep in the money. The reason why this replicates an owned position in the stock is because it's so deep in the money that the delta is nearly 1. What this means is, for every dollar of movement in the actual underlying index, the NASDAQ 100, this position is going to move nearly simultaneously with it. So they hold this regardless every single day through the night, which means that's where they get their overnight exposure to the NASDAQ 100. And then every morning, as based on what they said, they then look at what the market shows, and then they sell a call option above this market price to generate income. Here's where it talks about it. In effectuating its investment strategy, the fund will purchase and sell a combination of call option contracts that utilize the NASDAQ 100 index as the reference asset. That's NDX. The fund's sold call options will generally have 0 days to expiration, known as 0DTE options, when sold by the fund. At market open or shortly thereafter on every business day, the fund generally sells out of the money 0DTE call options on the NASDAQ 100 index that will expire at the end of the day. The fund's purchased call option, that's that synthetic option strategy, will be struck deep in the money and have a longer maturity when purchased, thereby offering a synthetic long exposure to the NASDAQ 100 index. So by holding this long call option and then selling out of the money call options, they are participating in some of the upside of the underlying index. One other note here as we look at the prospectus, these flex options are also guaranteed for settlement by the OCC. These options utilized by the fund are index options and are therefore cash settled European style options. This is critically important because assignment does not occur with these indexed options. Like traditionally, when you own a stock and you sell a covered call, if you get assignment, your shares will be called away from you and you will receive cash in exchange and lose your shares. Those are American style options. With European style options, these option contracts will expire no matter what. They're held until expiration and they cannot be assigned early. And then when they are assigned, when they are settled at the end, they are settled in cash as opposed to actually losing your shares. Here's the key part that makes them a little bit different than any other type of investment right now. The fund intends to make weekly distribution payments to shareholders. Such distributions generally reflect all or a portion of the option premium income earned by the fund's sold call options. However, a significant portion of the weekly distributions may be characterized as a return of capital. Very interesting. Weekly distributions. I talked about this with the Defiance CEO a few days ago, and she had concerns that this strategy may be difficult to implement and it may result in some NAV erosion or the net asset value erosion of the stock. It will be interesting to see as this stock gets a little bit older after we get 30, 60, 90 days in to see if this strategy can actually be implemented successfully. So let's really quick compare and contrast this investment XDTE and QDTE with Defiance ETFs QQQY, IWMY, and JEPY. Let's talk about the underlying index. With these ETFs from Roundhill, these new ones, they own exposure to the NDX or NASDAQ 100 and also the S&P 500 via SPX via call options that have been purchased. Whereas with JEPY, QQQY, JEPY by the way, QQQY and IWMY, they do not own underlying exposure to these indexes, the S&P 500, NASDAQ 100, or the Russell 2000. Instead, they hold cash. Now, how does the income generated? With these investments here, they sell covered calls, not cash secured puts, covered calls only on this index. Whereas with the Defiance ETFs, all of them, they instead sell cash secured puts. Now, one thing that is a big benefit to QQQY, JEPY, JEPY, and IWMY is that they hold cash, which means they're getting a big boost in cash flow from holding cash and generating that interest, whereas you're not going to get that with these ETFs. That being said, these ETFs may have additional upside appreciation potential because they own an index that is going to likely, no guarantees, but likely go up in value over the long term. For full awareness, I do not have any ownership investment in these positions. I have no desire to at this point. I'm running my own strategy for cash flow, but it will be interesting to see how these operate. I would not make any recommendation whatsoever, except to show caution towards these types of investments because they're so new, they have no history, and it'll be interesting to see what happens over the long term. Hopefully you found some value from this video. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a brand new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.